Welcome back to our Financial Basics series, Break-Even Analysis, Break-Even Point. My name is B.E.P and this is part 3. We're going to look at what happens when the selling price is increased. Remember in the first video, we looked at break-even in terms of number of units that need to be sold. And that formula was fixed cost divided by contribution will equal the break-even units that need to be sold. In the second video, we look at the break-even in relation to sales volume. And that figure we got by multiplying the break-even units and the selling price. And that will give us the break-even in terms of sales volume. All right, now, in this example, we're going to carry on using the scenario we had earlier on as a business selling digital information products online. And we're going to change the price from $100 to $150. And the variable cost will remain the same. We're only changing the selling price here. The actual variable cost remain the same. And the fixed cost remain the same because it doesn't vary with output. So what will be the contribution first? The contribution will be the selling price of $150 minus the variable cost or cost of goods sold, which is $20. And the contribution will be $130. So what would be the break-even in terms of number of units that we need to sell of this digital product now, which is fixed cost of $2,000 divided by contribution of $130, and voila, here we go. The number of units needed to cover all costs is actually 16 units. When we sell 16 units at $150, we're covering all our costs. Obviously, digital products make sense being sold at a higher price if we can get away with it. Now we're going to look at another example now. We consider increasing our selling price to $200. Do you want to try calculating what the contribution would be? Just try that. All right. So the variable cost is $20. So you can pause the video, and the fixed cost is $2,000. Pause the video because I'm going to go ahead now and show you the answer. Here's what the answer would be. The contribution, of course, will be selling price minus the variable cost of $20, and that will give us a contribution of $180. Now, to calculate the number of units we need to sell, if we were selling each product for $200, that would be fixed cost of $2,000 divided by contribution of $180, and that means we need to sell only 11 products for us to cover all the costs. So the higher your selling price, the lesser the number of volume you actually need to sell in terms of number of units, because you have a better contribution towards your business. All right, let's look at this example from the point of view of generating the sales volume. So what will be the sales volume? Here's the formula for the break-even in terms of sales volume, which will be break-even units multiplied by selling price. That will give us the break-even in terms of sales volume. Okay, do you want to try those examples we just did earlier on? All right, let's have a look here now. Sale price, or the selling price, of $150 multiplied by the break-even units of 16. That means the sales volume we need to generate to cover all our costs is $2,400, which is less than if we were selling 25 units. But then again, as I said earlier, we had more contribution to the business by selling at a higher price. Again, the last example we used of selling the product for $200, if we multiply $200 by the break-even number of units of 11, the sales volume required is $2,200. All right, we have covered example of break-even by units and sales volume if the selling price increases, what this means, the break-even formula, how to calculate break-even. If you like this video, like it. If you like it, share it. Subscribe to my channel, write a question or comment or feedback below, and if you have a private message, then email me to boomy@startyourownbusinessacademy.com, and I'll speak to you soon.